Okay, moving on then, let's pull up the BNSN stock cloud to give you a sense of all the individual names to keep on your watch list today. Starting with the name Piramal Enterprises. Was looking quite good earlier in today's trading session. Right now has slipped off significantly from the opening highs, but the good news here is that Axis Cap continues to be quite bullish on the prospects going forward. They've initiated their coverage with a buy rating target at 2,300 rupees a piece. TVS Motor, another one to watch out for. It looks quite resilient even as we speak. Goldman Sachs maintains a buy. They recently spoke to the management that seems to have reiterated its confidence in growth versus peers and the industry. M&M Morgan Stanley maintains its overweight stance, target at 1,112 rupees a share. IRB Infra, another name to watch out for. They've received an LOA from NHAI for 6th laning of National Corridor NH19. IDFC First has declared its floor price for their 3,000 crore rupees QIP at 60.3 rupees a share. KNR Construction, another name from the infra basket that's in focus. There's been a bid for 2,120 crore Kerala project by the company, which has been accepted. HPCL is looking to buy 50% stake in HPCL Shapurji Energy for close to 400 crores. You also have IIFL Finance in focus. They've bought back $1 million of bonds via open market. Pathak Babag approved investment in DK sewage project. And finally, you also have GAIL that's hogging a fair share of limelight. CLSA says tailwinds are expected to support earnings across business segments. GS is also, which is Goldman Sachs, is also quite bullish. They've maintained a buy, saying that benefits from cyclical recovery are expected. So there you have it, top 10 names to keep on your watch list this morning.
All right, auto stocks in focus ahead of monthly sales numbers, but also because we're nearing the launch of the scrappage policy. That's something that has been spoken about of late. And the last stage of, shall we say, negotiations between the Ministry of Road Transport and Highways and Motown is underway, with that sticking point that we've spoken about in the recent past, that 5% discount being spoken about by Motown, saying it's perhaps a little too high. My colleague Utkarsh Chaturvedi now has exclusive details of a suggestion that is being made by Motown to say that perhaps we can come to an agreement where the scrappage discount that can be given can vary depending on the model. Utkarsh is joining in with more details. Utkarsh, what are you picking up?
So the idea is the way you look at an exchange bonus. That can be something which scrappage discounts can come as. Now, what we have been told at the amount of time is that the OEMs are ready to give 1% as a base discount, and then they want the discretion to give the 2 to 5% discount based on models to models, demands to demands, because they say that 1% is not something which is possible at this point of time, and more than 1% is not possible across models. But for models which are not selling, for the models which there is lesser demand, they can think of getting it higher, and if the demand increases and competitive spirit really arises, then people might really increase it from a 2% to a 3%, 4%, might even a 5%, but they do not want it to be binding on them a 5%, they want it up to 5% from a 1%.
All right, Utkarsh, thanks much for joining us with that update. Clearly, Motown is pushing for model-based scrappage discount. Let's see how the government responds to that and what will be the final call. But definitely, lots happening as far as scrappage is concerned. So we'll have to wait and watch what the final decision will be on that. But let's keep the market conversations going. We have Gaurang Shah on the fundamentals, Kunal Bothra on the technicals. Join us this morning. Hi, gentlemen, and welcome aboard. Kunal, what do you make of the choppiness in the market? Once again, we've slipped into the red, and it seems to be almost an everyday affair that, you know, one day we're racing past 150, 200 points on the Nifty. The next day there is a reversal of sorts again. So by when do you think it's likely to continue? Till when do you think it's likely to continue?
So good morning, Karnya. I think very difficult to anticipate that when will the volatility or the choppiness, ease out. But I think, it's, there are some choppinesses and there are some, I would say volatility which may not be eventually damaging towards the trend. At least it looks like that. This kind of a choppiness is more of a range bound choppiness where you're seeing the index largely in a big broad range, and the gyrations within the range are just about at an extreme. Stock specific front, there are so many stocks which are still seeing a follow through price action. Yes, the market tilt has gone towards more on the defensive side, and we've seen that happening particularly from the start of the March expiry, but that has not led to a complete I would say a sharp correction to many of these high beta stocks. So you still have the IT stocks, FMCG names doing pretty well. At the same time, you still have metal stocks which are more on the high risk side. They're the ones which also continue to do well. Now in that backdrop, I would expect a couple of themes and couple of stocks which have shown signs of momentum. Even they would probably try and pick up pace. UPL is the first stock which I'm suggesting as a buy. In fact, I recommended the stock even yesterday as well. It was one of the top, Nifty performers. Yesterday on closing basis, I think it was up some 6% or 7% approximately. Yesterday, today also the stock has shown signs of a good opening. The first, couple of hours have been quite robust. We've seen strong demand coming in for UPL. So I think on that backdrop, I would expect the stock to continue to perform very well. And assuming if the market volatility dies down, then possibly that a stable uptrend for UPL could be garnered from current levels. So I would suggest a buy or a fresh buy at current levels. Revised targets of 700 on UPL and stoppers could be kept at approximately 620. The second stock which I'm suggesting is from the defensive pack. It's a pharma stock, Aurobindo Pharma. Now after quite some time, the stock is coming back into some smaller degree of momentum now. It's interesting because on the price fronts, the stock is still yet to confirm a breakout of its previous swing resistances and price resistances. But on the indicator fronts, the stock has already confirmed, some short-term breakouts, specifically on the hourly chart. So I'm anticipating that if the market tilt gets back into more on the defensive side, I think it's possible that many of these pharma stocks could, show signs of increased momentum. So Aurobindo Pharma is the second stock which I would suggest as a buy. Shorter term targets could be kept at approximately 925 and stoppers could be kept at 850.
All right, Gaurang, how about you? What are your FANDA calls for the day?
Thank you, Karanya, and morning to all of you all. So, you were just speaking about the direction of the market, and I think very soon we are going to see a curtain raiser for the fourth quarter earnings. Possibly in first 7 to 10 days of April, and our sense is that the markets could get some direction from the fourth quarter earnings. And if you have to just reflect upon the third quarter gone by, then the anticipation is that by and large most of the sectors and companies associated with those respective sectors are likely to throw in a positivity. With that in mind and a longer term fundamental low risk investment ideas, the first one is MGL, that is Mahanagar Gas Limited. I recollect Karanya speaking about Mahanagar Gas Limited on your show itself at around about 800, 850 with targets of somewhere close to about 1100, 1150. But prudent on our part at Geojit to reiterate a buy call with a revised target upwards on fallback of third quarter earnings and the earnings likely to reflect upon in the future with government policies about improving the infrastructure and availability of clean and green fuel. Our sense is that with pipe gas in Mumbai and suburban area, virtually a monopoly for MGL, along with that city gas distribution centers and a larger scope of top line getting improved, reflecting upon the bottom line. We have revised the target upwards to 1,400 on MGL, that is Mahanagar Gas Limited. This is a fundamental long-term investment idea. The second one is from the life insurance pack, and SBI Life is a stock purely with the opportunities that lie ahead for life insurance companies. All those entities which are associated with personal life insurance, including SBI Life, ICICI Approved, and HDFC Life. So SBI Life with a long-term target of 1020. Prudent to give a disclosure that if the earnings have to be above our expectation, then by default the targets get revised upwards. But both these are long-term investment ideas.
All right, Gaurang, thanks so much for that. And indeed, Q4 earnings will be important to watch out for, like Gaurang said, with regard to getting some direction as to where we're heading, at least from the fundamental standpoint. Now, long term is actually what market veteran, market expert Gopal Srinivasan is talking about as well as his secret sauce for getting rich. He says, ignore the short term volatility and focus on the long term. Listen in.
Build a great business. That is, if you're an investor, find a great business to build in. I think these are timeless changes. Whether you're going back in time to any of the classic value investors, or whether you go back to a Warren Buffett, or whether you go to Rakesh Ji, anywhere. Finally, you have to find great businesses and back them if you're an investor, and try to ignore the short-term trends as much as you can and stay long and protect your money by backing great businesses. So find those great businesses and stay with them patiently. This is exactly what private equity does, and that's what I think every retail investor should try and do. Surfing comes with the risk of accidents.
All right, Gaurang, Kunal, do stay with us. We'll come back with viewer queries. Everybody watching in, do stay tuned. We'll come back in just a bit.
Back, still watching Buy Now, Sell Now. Let's get on with our viewer queries then. First up is a Twitter query from Peter Richards. He bought Gland Pharma at 1905 and Newland Labs at 1079 rupees, and now he wants our expert opinion on whether he should stay put or exit. Kunal, do you track both of these names? Could you offer your view on Newland and Gland Pharma if possible?
So I'll start off with Newland Labs. Karanya, I think that stock or the charts for that stock looks pretty okay. I think it's been one of the few stocks from the pharma pack as such, which has done reasonably well in the last 9-12 months. I think more than doubling in that kind of a time frame. I think off late as well, the stock has gone through a sideways correction for Newland Labs. So I think at 2050, 2070, where the stock is currently trading, I think it's also trading above its 50-day moving average. So it tends to take support at those averages, end the time correction, and then move up higher. So I think if that's the pattern for Newland Labs, then I think it's a good I would say time as such to average onto the stock or hold on to it from a short-term view as well. I think the previous high, which was 2,200 plus, I think that should be taken out as now the stock gains a stronger degree of momentum. For Gland Pharma, I think the price history is a bit limited for me to really comment on the longer term charts. But it's a stock which is also showing those sporadic signs of rally. So we tend to see 2-3 days of consistent price action on the upside, then a sideways price correction, and then the stock keeps on moving up higher. So we typically call this as a change of range or a range shift behavior for stock prices, and that generally happens when you see the stock gradually moving from one territory on the downside to another territory. So for example, from February start of 2100, the stock is gradually moving up higher to almost ranges of 2400, 2500 where it's currently trading. So I think it's a stock which looks quite attractive on the short-term charts and whatever the chart history I can look at, and I think it also indicates that the stock is going into a subtle short-term uptrend. So I would advise hold on both of these stocks.
Gaurang, do you concur with Kunal's opinion on both of the names, Newland and Gland?
Well, Karina, to be very honest, we don't cover both these stocks, but pharma has been exciting for quite some time. And as a brokerage house, we've got multiple companies under coverage in the pharma universe. Unfortunately, can't comment on Gland Pharma and Newland since we don't cover, but as an alternative investment idea, just in case the investor or other investors who are watching this show would want to get invested in pharma, then Cipla and Divi's Lab would be the preferred picks.
All right. Okay, interesting views coming in from Gaurang there on the pharma space. Let's talk about the second query then. We've got a query from Abhay Khatri, who's written about Tata Steel. And Kunal, what a move up that it has been for Tata Steel, right? I think one of the leaders from that metal pack as well, gaining over 30% from the lows in the year-to-date period itself. The question really is, with the up moves that we've seen of late, would you see any opportunity in the near term to pick up and see perhaps a little short-term gain?
So I think from a short-term view, these are strong momentum candidates, and momentum stocks are the ones which are generally in demand, even if the market goes into a sideways range or a correction as such. So look at the last 1 week approximately. The Nifty and the Bank Nifty both have shown signs of a bit heightened volatility, but metal stocks have been on a tangent of their own. They've seen a strong demand on the upside. You've seen consistent bouts of volume patterns moving up higher for Tata Steel. So look at the comparative volume in the last 3-4 days for Tata Steel as compared to its even in the recent last 1 or 2 months, and you've seen that there has been a strong demand and strong accumulation for Tata Steel in this kind of a time frame. So it tells you that the resilience of this sector, that even with the markets being extremely choppy, you've seen that these stocks have managed to outperform and give you positive returns. So I think that's a very strong and a positive signal for a stock and a large cap name like Tata Steel. So I would expect that the stock should continue to move up higher. It's also given a 10-year breakout for the stock on long-term charts. So those are very strong indications that a new multi-year uptrend could be in the offing for many of these steel stocks, of course led by large cap names like Tata Steel.
Well, it's hovering not too far away from its high levels as well, 823 on the charts right now. Let's also get Gaurang's view on the fundamentals. Gaurang, this is a stock even a couple of years back that some people had said was not really doing very well. And what a turnaround story it has been over the last 2 years or so. What is the advice that you would give the view on fundamentals, whereas Tata Steel is concerned?
So Alex, I think the entire Tata Group companies have delivered phenomenal set of returns, including Tata Motors, if you want to point out another underdog. And what a performer it has been. And like Tata Steel, I think there was a huge hangover. Of course, there was a huge cheer when they took over Chorus, but post the takeover, I think it was sitting on the balance sheet as a sore and a huge heavyweight. Decisively, I think post Mr. Chandra took over, there have been not one but a lot of business strategies that have been changed for respective companies in the respective sector, and Tata Steel happens to be one of them. And if I have to reflect upon two things, one is government spending on creating infrastructure, and second one is making environment conducive for private capex, then Alex, two commodities will have to see a higher level of consumption on the domestic side. That is metals and cement. And Tata Steel, JSW Steel, JSPL, Hindalco, Vedanta, that's the entire universe in the metal pack that we are positive on. This question from the investor is whether he should get in at Tata Steel. So my advice would be that definitely you should, but don't go and deploy all your money at current level. Maybe 25-30% at current level, and a staggered adding to the stock of Tata Steel at lower levels would be a more, I think, a systematic approach from a long-term point of view.
All right, let's move to the auto space now, and the next query is coming in from Rajat Verma, who's written in from Jaipur. Thanks, Rajat, for writing in. He's holding 100 shares, Kunal, of Mahindra & Mahindra at levels of 925 per share. Let's actually pull that stock up and see where it's trading right now. And what he's asking essentially is whether he should average at the current market price. What is the view on the charts?
Again, I think a stock which has done phenomenally well, Alex, in the last 12 months, from being a stock which was sub the 300 mark to being a stock which bounced back sharply and managed to break above that 900 level, I think is quite a feat of quite an achievement for a stock like M&M. It's covered up a lot of the underperformance with relative to its peers as well in this recovery or in this price rally. So I think now on the short-term charts, many of these auto stocks are going through a period where the stock prices are dragging, they are consolidating, going back to their mean reversion processes, coming back to some cool off on indicators as well on the longer term chart. So I think it's a process, and I think if you can take advantage of this process and try and average out lower for M&M, I think it could be a good strategy. Two levels which I would probably suggest for M&M in terms of averaging out. One of them would be closer to 740 mark, and the other would be approximately at the 680, 685 zone. So I think these two are very important support zones for M&M, and I think if you can average at these two levels and then bring your cost price lower with a longer term time frame, I think you could there seems to be a much better chance for you to reap in some good rewards on the stock.
All right, Gaurang, on the fundamentals. Now, it's interesting if you look at the last decade also when it comes to M&M, either one of their two main businesses has actually performed for them. Very rarely have you seen a situation where utility vehicles have not performed and at the same time farm equipment has not performed. So what are you seeing as far as the fundamentals going forward? Of course, we'll get some clarity on the numbers when they put out the sales numbers for the last month or rather for March tomorrow. But on the fundamentals, how do you look at it?
Well, one of the stronger companies, and the offerings that M&M has, Alex, is across the board, right from your SUVs to utility vehicles, to light commercial vehicles, to medium and heavy commercial vehicles, to agri equipment, tractors, you name it and they have it. And the recently launched new avatar of Thar also has been given a thumbs up by customers. And if I'm not mistaken, correct me if I'm wrong, there has been waiting period for the new Thar as well. And as we go forward, I think there will be multiple new launches that will be coming through. Along with that, modified avatars of the existing models that they have. Scrappage policy is also one of the boosters which will help M&M in their commercial vehicle segment. And you were just referring to it a while back. So we remain extremely positive. And if you like the stock at 900 plus, I don't see any reason why you should not like it at closer to 800. So definitely, I would say go ahead and average. But like I mentioned earlier, for the earlier investor or for Tata Steel, average in parts, I think that would be a better strategy.
All right, gentlemen, thank you so much for joining us then and sharing your views on a host of stocks and helping our viewers out as always. Moving on then to March auto sales expectations. Well, it's likely to be a decent set. The demand momentum seems to have sustained for the month of March 2021 as well. If you look at PVs and tractor segment specifically, inventory levels seem to have gone down and they're much lower than below normal because of strong demand. MNHCV demand is growing sequentially and it's likely to see a decent uptick month on month this time around as well. But yes, it's definitely not on par with the expectations we had at the end of FY21, but still an okay uptick, I would say, a decent momentum that the segment has been able to sustain. Two-wheeler definitely is relatively muted. Maruti, we're expecting 1.7 lakh units to have been sold in the month gone by. For M&M Auto, 35,900 is what we're penciling in, and for Tata Motors PV, 30,000 is what we're expecting. As far as the farm segment is concerned, for M&M tractors, we expect 32,700 odd units. Escorts, 12,250 units are likely to have been logged in the month gone by. As far as CVs are concerned, Tata Motors, we expect a little over 36,000 units. ICICI close to 5,900 units. Ashok Leyland, 14,640 is what our expectation is. Decent mid-single digit growth on a sequential basis for all of these CV players. For two-wheelers, Hero MotoCorp is likely to have sold 5.4 lakh units, an uptick of 6% month on month. TVS Motors, 3.13 lakh units is what we're expecting. Royal Enfield, 75,000 is the estimate, and for Bajaj Auto, it's close to 3.8 lakh units. Again, flat to low digit growth on a month on month basis, low single digit growth. On that note, we're slipping into a break. More updates on the other side. Stay tuned.